Hello everyone, this is Juan Sarmiento and today is Friday, January the 13th. Okay, so let's take a quick look. The SPY has been doing pretty well, and we had our last view at the charts on Monday. And let's see the ES, which is the futures equivalent. And SPY, let's go back to SPY, that's where I had my chart. And yeah, I had told you that the market had reversed from the downtrend. You can see the downtrend here, the two lines of the channel, and we have an upward trend here. So I said that if this line here at 402 is crossed, then it will go test the high and of this new forming channel. So then the down channel would be invalidated. However, that has not happened yet. This line, upper band or upper line of the channel, downtrend channel, will have to be broken for the markets to make new high. And so far it looked like it might, because it's here in the Ichimoku cloud. It came down, broke below it again, which is a bearish sign, just like in this area, but it bounced off here. So that looks really good. Okay, we'll see if it's going to hit there and exceed. The stochastics may be pointing at a top here, but this other oscillator is very strong to the upside. So we'll see in any case. Let's take a quick look at our positions here. Go to the Analyze tab, and we have 84 shares right now. My average cost is $422. Now we're getting really close at the 400 level. So we are catching up. We're getting very close. Our loss has been reduced. It used to be much larger. Since the opening, we are at a $2,000 loss. Okay, and so far this year has been really good for the bulls. So $1,100 in profits so far this year, but of course that's little consolation considering that we have been losing money since when you consider all from the beginning. It doesn't matter, it's long-term. We're long-term investors here, and I wanted to demonstrate to you how this system would require you not to think much, just buy without hesitation every time. Let's look at our buying power is for $44. So I'm going to add another $500. So I adjust my cash, and of course this is all fake money, but you could keep track of something like similar to this. I do 500, but you can put 500 every month or 500 every 2 weeks. I do it every week. Okay, so I'm going to add the 500, and I'm going to add, now that I have $544, I'm going to buy one. So I click on the ask here, and that gives me the buying order here. I'm just going to change from 100 to just one share. One share, okay? And that's going to cost me $396. Lock it in and send it. And they're filled. This will bring down my average, but not by much, because it's 1 out of 85 shares that we now have. Once we get to 100, we could sell calls against our position. I'm not going to do that. That's making a decision that you want to sell calls. That's not necessarily a good idea. Okay, but we'll see when the time comes. If you get to 100, you could sell one call against it. Let's say with 30 days to expiration, like 28 days to expiration, you sell one call at the current strike price at 36. You can just click on the bid, and that will give you one. And look at the risk graph, what it turns out once you sell the one, you can't sell one until you reach to 100. It's not allowed. But if I had 100 shares, I could sell one call against it, and that neutralizes my position. It is no longer bullish. Right now we have 85 deltas, and so by selling one call, it will go down to 33 deltas. So it's a moderate bullish trade. Okay, but we'll cover that when the time comes. If we want to do that, if we want to go that route, it's more of a neutral trading, and it is a trading, but you can certainly sell one share, one call against your 100 shares, and then keep building on the calls, on the long shares. Okay, that's all for today. Thank you very much for joining me. See you next time. Bye-bye.